All of this activity we are seeing in distribution is pushing valuations up, another reason companies are more open to selling as opposed to 2 years ago. Some say that the amount of leverage available to private equity firms to complete deals is contributing to this upward trend, and strategic buyers are willing to pay more in some cases than private equity firms because of the cash available on their balance sheets. But when you start dipping into smaller companies or add-ons to platforms, valuations go down.
It's very dependent on the company itself. You can look at the EBITDA growth historically and projected for a given distributor. You can look at the industry. You can look at the margin profile. You can look at return on assets. The only thing we can say consistently does seem to hold up in distribution and in just generally in the M&A market is that as you move up in size, you do see an increase in EBITDA multiple from a valuation standpoint. You can see that for transactions between 0 and 100, there's a multiple of 6.2. Many distributors would expect to buy a very small, say, sub 20 million revenue distributor 4 or 5 times. And a business that might be in the 50 to 100, might be at 6.2 times. But one of the problems that you run into in valuation is that public deals, larger deals, public deals are far more likely to have a disclosed multiple than smaller deals. So your sample size is off. If you look at the median of the enterprise value that you're using in your sample, is often a higher multiple than if you're applying it to a 50 million enterprise value business. You would probably see that the sub 50 million enterprise value deals are typically a 6 times or under multiple. That's just anecdotal. And then a good platform could be I'll give you a wide range, but could be kind of 7 to 10. And then, you can see greater than 10, rarely, and that's often because of a lower trailing multiple.
The outlook for 2011 and 2012 is strong for distribution M&A. Kluwer provides his take on the next year.
I think that 11 and 12 will see a return to, activity levels similar to 07 and 08. What you might not see as much of is the mega buyouts in distribution. But in the middle market, I think activity will get back to 07, 08 levels this year or next. And it's consistent with our discussions with a lot of these private equity-backed distributors who are thinking about a sale either this year or next. There was a lot of investment on behalf of private equity in 04, 05, 06. And those funds are now, time flies, but those are at a 5-year point now.
To learn more, please read the special report. Parts 1, 2, and 3 featured in the March 25th, April 10th, and April 25th issues of MDM Premium. Those articles are available online at mdm.com. Thank you for joining me.